Hello everyone. So today I'll be talking about what is the safest investment that's out there basically. What is the safest investment? Is it stocks? Is it bonds that companies are selling you, or private or municipal governments or whatever? Is that like a safe investment, or buying a house at an inflated price right now and paying property tax on it and all these other taxes on it, paying home insurance and whatever? Is that like the safest investment, or upkeep fees for having a house and having the tenant not pay you and getting into all these problems, getting a eviction notice on the tenant that doesn't leave? Is that like the safest investment, that you're going to be guaranteed that you get paid your money? Well, this isn't investment advice or anything, but this is my opinion. So in my opinion, I think something like government bonds would be the safest investment that you could make, right? If you put your money into the stock market, stocks can go up a lot. Some stocks can go up a lot, like companies like Toyota, which I can show you. And something like Toyota has gone up a lot over the past 40 years. It was $5.59 back in 1982. Today it's $164.81, right? But there are stocks that also went under and that don't even exist in the stock market, or Dow Jones Index, or S&P 500 or whatever. That's also true. There's countless other companies that just aren't listed here anymore because they went under. For safe investment, it was like putting it into a savings account. Because I remember when I was growing up in the 1980s, interest rates were about 5%. From the 1980s to the 1990s, it was at least 5% if you had a savings account. Today, I don't even think it's 1%. I don't think the banks would pay you even 1%. Let's look at a savings account rates for Wells Fargo. See how much they pay you. It's not even 1%. I'm gonna put 0.01%. That's less than 1%. You might as well just keep the money in the checkings account, or just keep it in your mattress at that rate. That doesn't really pay anything. U.S. Treasury bonds. I think it's 2.93%. Well, depending on how long you keep it in there. If you keep it in there for 5 years, it's 2.91%. 2 years, 2.62%. So as the longer you keep it in there, the more you get paid. Okay, basically that's how it works. So you have a savings account from a commercial bank that pays you less than 1%, actually 0.01%, and you don't know what's going to happen in the stock market now, right? Because stocks can go down as interest rates go up, right? That's the thing. So keep it in US Treasuries for 10 years, and the bank is only paying this. So the government, federal government, is paying you 299 times more than what a commercial bank is paying you, right? So this is real. You're going to get your money back. But there are, of course, risks to even putting it into government bonds. Like if you have hyperinflation, then I guess the interest rates that they offer isn't going to offset the rate of inflation. But let's just assume that we're not going to have hyperinflation. Let's say everything is going to be all right, and I guess the Federal Reserve will raise their rates, or central bank will raise their rates, and of course this is going to cause everything else to tank. It will cause the real estate market to tank. It will cause equity markets to tank. Equity is, yes, stocks and stuff like that. Other investments also will crash, and banks, I guess, savings accounts rates would also probably go up if they raise interest rates, and that's the thing. So yes, so if you buy treasuries, you're getting something, right? Even if it's not 5% like it used to be, or 7%, this is still better than just putting it into your savings account, which doesn't give you anything. And I don't think it's worth putting any money into a commercial bank's savings account, like Wells Fargo, Bank of America, Chase, Citibank, or whatever. They're all going to pay about the same rates, which is nothing. So what do? Put it in cryptos? Is that a safe investment? Well, let's take a look. Price of Litecoin. We're going to compare for 1 year. Year to date. It was $347.72 last year. Okay. So how much you didn't make money, you lost money. You lost how much? You lost 81% of your money if you bought cryptos, right? People are saying this is like safe investment, great stuff. Let's look at Ethereum. Coinbase is a good place to check prices. Let's look at all. So I bought it November of 2021, 4,564. I would have lost 61.1% of that value. You know, look at the price of Bitcoin. Let's look at its very, very, very highs. 64,400, okay? I would have lost, and this is last year, okay? This when it was 64,400. If I would have put money into Bitcoin, I would have lost 53% in less than a year. In 7 months, I would have lost that much. Right. Putting it into a bank account, worthless. Keeping it under your mattress, well, it's not going to do anything, and it is slowly being eaten away by inflation. Okay, we all know that. Putting it into stocks, let's see, let's look at some of the stocks. Let's look at year to date. Stocks also went down. Over the long run, this is still up, but in the past, in year to date, from the beginning of this year to the end, it has gone down also, right? It's gone down about 28%. Let's look at some other stocks. The Zillow stock, let's see how much that went down. Year to date. 1 year. If we compare from 1 year from today, it's gone down considerably as well. It's gone down 64.4%. So obviously stocks are not a safe place to keep your money when you have a lot of volatility in the equities market. Let's look at Carvana. Boy, did these people take a loss. Carvana was going to be the thing that replaced auto dealerships. Was it? Did it replace them? No. They actually did a piss poor job of selling cars, causing all kinds of legal issues. They went down 90.4%. So, in a risky, turbulent environment, stocks aren't the place to put your money. Speculative assets like cryptocurrencies, not a good place to put it. If you didn't do that and you just had cash in your checking account or in your home or whatever, you would have done better because you wouldn't have lost anything. If you bought something like U.S. Treasury bonds, you would have done better. Let's say you had $50,000 and you put your money into Treasury bonds for about 10 years, and that was about how much interest? 2.85%. I left it in there for 10 years. Well, this green line represents the amount of money that you put in there, which was 50,000. The red line represents the amount of money that you get at 2.85%. For 10 years, I would have made $16,223. Certainly, it's worse than inflation. However, if you have savings, you're not going to use all your savings on, like, let's say, fuel or gasoline, which has gone up a lot in the past 1 year. I think I was paying about $4 last year for gasoline. Today, it's about $6. So I'm paying 33% more for the price of gasoline when I fill up my tank. And I live in California, near Los Angeles. So you're paying more for it, but I'm not going to be buying, let's say my life savings was 50 grand. I'm not going to be putting $50,000 in fuel. Okay, that's just not going to happen. And if you have cash, you could start a side business or do something like that. But in this environment where you have deflation, that's not a very good thing. You could start a business, you're not going to really make a lot of sales, you're not going to sell a lot of stuff because we have inflation right now with high gas prices, high energy prices, high food prices, and all this stuff. And that is basically making it more difficult for people to have any disposable income. Sure, there are rich people who have a lot of disposable income, and paying $6 to $7 a gallon doesn't matter to them. But that's not a lot of people. So, in my opinion, something like U.S. Treasury bonds would be probably the best type of investment in an economy that's going into a recession, and at the same time you're having inflation. That makes it even worse, because when you have inflation, which isn't artificial, which is created by shortages of goods and services, that's not good, because even when the central bank raises interest rates, it may not curve the price of it may not make the price of energy go down very much. It could go down a little bit, but if it still stays high, then that could be a problem for a lot of people. But then I might as well put my money into something that yields some kind of yields something, than putting it into something that's going to go down in value in the next 2 years or something, or 2 or 3 years, or having something where I have to keep the upkeep on it. Like if I had real estate, like a number of houses, then I have to pay property tax, I have to pay homeowners insurance, I have to pay people to maintain the property, like doing the gardening and stuff, the landscaping. That costs money, right? And like I said, I may have tenants that don't pay, because they lost their job, right? And they squatted there for 3 months or something, or 6 months, and I can't do anything about it until I get a eviction from the sheriff's department or something. And that doesn't happen in one day. It could take weeks, or it could take months, because the sheriffs are evicting other people as well who aren't paying, right? So that's a problem, and you have to go through a foreclosure process. This costs money. It takes time to do that. No, not a foreclosure. That's if the bank is foreclosing on the property owner. But to get an eviction, to get someone out, some states it's more difficult. Like in a state like California, it's very difficult to kick someone out. It could take about 6 months, and you're not making 6 months worth of revenue, right? And you're paying all these expenses on top of it, like property tax, homeowners insurance, and all these other stuff. You're paying for all of that, so you're just taking a loss, and plus the tenant could damage your property. It's a big risk, especially in a downturn economy, right? So something like putting it into a treasury bond would be a good thing. So you could buy treasuries. You could just go to this website. This is a government website, and you could just open an account here and get treasuries. You could buy treasuries directly from the U.S. government. I guess there's busy. They're very busy right now. There's a lot of demand for it. I guess there is, from I guess big investors, institutional investors, and stuff like that. You could buy it as an individual. You don't have to be an institution like a bank, or you don't have to be like a mutual fund or whatever. You don't have to be a state government or a municipal government. You could just be an individual person buy U.S. Treasuries as well. So yes, I mean, making something is better than making nothing. And if you have a job, I suggest you just keep it. Don't hop for jobs. Don't go job hopping in an environment where you're nearing a recession or already in a recession. Probably, I don't know if we can officially. They say that we're not in a recession, but it sure does feel like that. Okay. Tell me what you think in the comment section, and leave a comment. And thanks for watching by Ace 1000 KS 1975 signing out.